Looking at candlestick patterns, it's almost like texting your crush. Sometimes you see a short response and it might mean a good sign, other times it might mean a bad sign. Well, it's the same way in the market. If you read the candlestick patterns incorrectly, you will be ghosted by the markets. But if you get them right, you will be able to stay 2 steps ahead. So there's already a lot of videos out there talking about candlestick patterns. Be it the shooting star, the hammer, the outside bar, the engulfing candle, the inside bar, the 3 soldier patterns, all sorts of candlestick patterns. But very rarely do they get into why does it work and when does it not work. So in this video, I am going to show you how you can trade candlesticks the right way, the profitable way, and a way that has logic behind it. And by understanding that, you will be able to achieve trades like this and like this. So let's get right into it. So in this video, we're going to be covering 3 main topics. The secret behind candlestick patterns that no one tells you, context is everything, and the third one, the double confirmation. So let's head on to the charts and let me show you what I'm talking about. Okay, so we are on the dollar Swiss pair on the 1-hour charts, and there's 2 candlestick patterns that really stick out like a sore thumb to me here. The first one being this outside bar. Some of you guys refer this as an engulfing candle. And then the other one that we have is this one here, a hammer at the bottom. So the secret that no one really talks about or goes into when it comes to candlestick pattern is what they actually mean. 2 things where it's really important to understand. When it comes to candlestick patterns, it largely means aggression or weakness. But what does aggression mean in this context? If we zoom out slightly further, okay, we can see overall we are in a downtrend. So this outside bar here means that the overall downtrend might be resuming. That's where the aggression is coming from. It's coming from the bigger players, perhaps on the higher time frame, indicating the sells are going to resume. Okay? When it comes to weakness, I want you to look at this hammer here. Okay? Now this hammer is telling us there is weakness in the downtrend. We are trying to make new lows here. Okay? But as we reach the recent low, the prior low here, we see weakness in the downtrend. That's what this hammer means. It does not mean aggression. It does not mean things are going to turn around and go 100, 200, 1,000 pips to the upper side. So as you can already tell, there is a few things to think about when we are looking at candlestick. The context, i.e. the location, and the trend. You can clearly see here that when this outside bar happened, it has no problem going down towards the recent low. But when this hammer happens, it has a lot of trouble going to the upper side. If we fast forward a little bit more here, we can see this continues to drop. So aggression and weakness are those 2 main things you can find from candlestick patterns. Okay, moving on, let's have a look at context. What do I mean by having the candlesticks appearing in the right context? Now here I have the dollar pair, okay? We are overall in a downtrend, okay? We also have a key support and resistance right here. Price is just hovering around that area. And what else can we see? We see we are ranging. Now, a very classic way of trading range would be trading it from the top or buying it from the bottom. Now, let's have a look at what happens next. If we move forward just a little bit, we have a breakout from the range, and then we have an outside bar, an engulfing candle, okay? So this is essentially a fake breaking out of the range, coming back inside the range. This is showing aggression from the sell side that is resuming. If you understand the concept of momentum, look at the momentum of the buyers going up. It's weakening. And we have the candlestick pattern telling us things might turn around. So this, in my opinion, is a candlestick that appears in a very good location. We have the trend, we have the SNR, we have a range high. That's a good context, okay? Now, another example that I have pulled up here is the Aussie dollar. Now, Aussie dollar is not really in a trending state, but recently we are breaking towards the downside. What else do we have? We have a clear series of lows. There's SNR here. If we do see price coming back into that level, forming those candlestick pattern, it might show signs that the aggression from the sellers are back. So let's see what do we get. A very, very good looking shooting star. Again, good context, good location, there's trend, things are setting up the right way for this candlestick pattern. Now I'm gonna get into the entries right after this. Let me show you one more example that we have. Now we have gold, okay? Gold, at the time of looking at this, we are in an uptrend, and let's play it forward and see if we do get a pullback, which we do, into this SNR, into this breach area here, and we have a big hammer forming. Now these three examples that I have shown you so far, they're all appearing in a good location in the right context, okay? And this is the part where most traders miss out. All they do every single day is just looking for candlestick patterns inside the range, be it at the top of a trend, trying to catch a low when the market is tanking, trading it in the middle of the range, all sorts of ridiculous stuff. You want to make sure when you're trading candlestick patterns, it's all appearing in the right context. Once you know they are in the right location, the right context, then we move on to the final piece, and that is the double confirmation. Okay, so as we're looking at the gold chart here, price is pulling back, all right? Now we see rejection coming in, and that's our hammer. Now we see the hammer appearing at the breach area, potentially signaling a turnaround, okay? Now to get the double confirmation, we want to go down to our lower time frame and see if the pullback is actually slowing down and if there is a reversal happening on the lower time frame. It is essential to do that, and it is very important not to just get in based on the candlestick pattern alone, hence the double confirmation. So if we jump onto the 5-minute time frame here, here's what I want to show you, okay? The hammer is signaling things to turn around. Now if we look at this pullback here, there is no sign of turning around. Sellers are still looking very strong. You want to make sure things turn around here, which means you want to get buyers to be looking stronger. So let's move forward here a little bit and see what do we get. Okay, at this stage here, we can already tell from this last move from the sellers, we get a full turnaround here, right? Another try from the sells, and then a further turnaround here. If those of you guys know what this is from the mastering price section course, this is a V formation, correct? And once we get that V formation, the only other thing we need to do is look for a test, okay? As soon as we get a test coming in here, that's where the safest entry will be with minimal drawdown. So let's see if we do get a test into that area, which would signal our buy, okay? Let's move forward here. Okay, so we do get a pullback. Let's say we hit the buys right there. And essentially what you want to do is put your stops below the recent low and then trying to take it up to the recent high. This is one of the simplest way of trading candlestick patterns. Of course, at Urban Forex, we use much more sophisticated entry with very, very tight stops, but this targeting the recent high. Now, this is a very simple approach where all beginners can try out for themselves. And let's see where this thing goes. So we're in for the buys, get a little bit of drawdown, a test, and let's see if we reach target. Still holding. All right, there we go. So a very quick resolution, making sure that you're timing the market correctly, because by doing it this way with a double confirmation from the lower time frame, it increases the success rate for the candlestick patterns by 2 to 3x. Okay, so let's have a look at the other example that we were just looking at, Aussie USD. Now this is for the sell side. We do see, as we were talking about this earlier, we do have a resistance area here and we are seeing a pullback coming in. Let's double check if the momentum is slowing down on the lower time frame. Let me go down to the lower time frame here and let's see. So again, as the shooting star was appearing, it still hasn't shown signs that the sellers are dead. Let me do an example for you. Let's say if we go back to the 5-minute, let's just pretend we get in here and we put our stops at the top, okay? So this is assuming that we get in based on the shooting star. Now, the technique of double confirmation means you're not gonna be getting in here. Instead, what's gonna happen is you're gonna wait to see the momentum slowing down. For those of you guys who know this is called a rubber band man, and we wanna make sure the rubber band man have a full rest and the entire momentum shift to the sell side. So let's see what do we get here. So far, the buyers are in control. Okay, now we see sellers have took off. But that's not the entry. This might be the V formation that you guys are familiar with. What do we need after the V formation? We need a test, right? So we want to see if the buyers still have any juice left to move up. Okay, it's still going up. Sellers are still holding. Let's wait for a little bit more data. Okay, I think buyers are still testing the highs. Okay, how far is it gonna go? All right, at this stage, so far, things are looking good for the sell side. We came back up for a test. Sellers are still holding their grounds. Okay, buyers are not showing any signs of power anymore. And it's only at this phase here where you want to get in. So let's put our sell position on right there. And let's mark our stops and our profit. Okay, so let's play this out. We have a little bit of a drawdown. Sellers are still taking control. Price is still holding. As long as we don't go any further up, we're all good. Let's see, in profit now. Let's see if we get a drop. Very slow price action move. There we go. Looking stronger. Slight pullback. And there we go. Okay. So look at the difference here. Getting in at this zone here versus getting in at initially where the shooting star was showing up on the higher time frame, which was here. Yes, you might have a better risk reward at that stage. But look at how much more longer you have to wait until the trade actually resolves. In trading, the quicker your trade resolves, the better off you are. Okay, because when we are holding trades, emotions starts to run, right? Things in your brain starts to fire. You're gonna remember all the losing trades you have and you want to get out as quickly as you can as soon as you see things not going in your direction, right? So it's very, very important that you use the lower time frame technique to get as close to the launch area as possible. All right, moving on to the dollar Swiss pair. Okay, now as we were speaking about this earlier, we have a strong downtrend coming in. We have a key support and resistance to the left, and market is forming a range. And we are looking at this as a potential fake range breakout. Okay, we moved up slightly higher, and then we have outside bar forming here, an engulfing candle. All right, so let's move on to the lower time frame and see what this actually looks like. So we can see this is the top of the range that we've broken out of, and then we see immediate rejection. However, things from the buy side still looks fairly strong. It almost looked like we have one single push to the upper side and then one single push to the downside. So with all intents and purposes here, it's still too early to look for a sell here because this might still tend to happen. What if some traders are looking at this and they're saying this is a breakout of a range, I'm gonna buy the pullback for a further continuation of the uptrend, right? And then we will be fucked, right? So we wanna wait and see if the buy actually tries and fails, okay? The V formation and the test idea here. So let's see what do we get. Okay, we do get buyers coming in. They're coming in fairly hot now. Now, what we wanna see here is the buyers unable to make any more higher highs and instead sellers coming back down. So let's see what do we get. Okay, so far nothing from the buy side. This is all they can do. Sellers are immediately coming back down. If we see another move that fails to go higher, that's where we want to get in. Okay, still trying. Okay, there we go. Things are turning around. We are forming lower highs here. Okay, so let's look for a sell at this spot. And the way that we are going to position our trade would be right here. And remember, we are doing a range trade. So the target would be the bottom of the range if we're just using very, very simple techniques here. Okay, so where's the bottom of the range here? We have all the way down here. All right, so there's the entry and let's see if we get a resolution quickly. Seems like we do here. We have a little bit of support coming in here. That's why we are seeing a reaction. Immediately got rejected from the top of the range. Price is still holding. Let's see how fast it can go. Looks like we have a launch. All right, so things are looking good here. As long as the downtrend on the lower time frame is still continuing, we are looking to get out at the bottom of the range. So we are almost there. We are finding some resistance, some support here. Let's see if we can break the support on the far left. Almost there, few pips away, and there we go, hitting target. Okay, so this trade is actually a perfect example where you're really timing the trade to the absolute pip without much drawdown using the double confirmation technique. So it's actually not that difficult. You just need to put in a little bit more work, a little bit more effort, and you will be able to perfect your timing trading candlestick patterns. So candlestick patterns is a very, very powerful tool, provided that you use it in the right context, which also means if you're using it the right way, you can prevent losing trades, you can manage your trades even better, and even identify the best possible entries. We teach this a lot in the Urban Forex courses. If you like what you have been watching, head on there to check out the courses. Otherwise, just make sure to hit the like button below, subscribe if you haven't already, turn on the notification bell, and I'll see you on the next one. Cheers. Bye for now.